International Monetary Fund and its outlook for Australia in particular, with some not too great figures. Joining us live is the Finance Minister, Mathias Cormann, for more on this. Mathias, what do you think? Is Jim Chalmers right? Are you overplaying this?
Well, no. I mean, we've said for some time that we are facing global economic headwinds. Everybody can see obviously global trade tensions and the geopolitical issues that are weighing down on global economic growth. We've been planning for the impact, to dealing with the impact of the global economic headwinds we're facing. And on top of that, of course, we had a significant flood earlier in the year with a significant impact, and we're dealing with a significant drought, which has a significant impact on the domestic economy. But I mean, if you look at the IMF figures, they've again downgraded their outlook for global growth. Australia is a globally focused, but which also means globally exposed, open trading economy. When global growth slows down, that has an impact, inevitably has an impact on our Australian domestic economy. But irrespective, if you look at the Australian growth outlook that the IMF has put forward, it's the highest of all of the G7 nations except the United States. So in an international context, the Australian economy continues to perform well. I mean, we're into our 29th year of continuous growth, 1.4 million new jobs, the highest workforce participation on record, the lowest welfare dependency in 3 decades. We continue to be a AAA rated economy. So, I mean, yes, I mean, we're facing challenges and we're dealing with those challenges. We've got a plan to deal with those challenges. The key is to continue to monitor, of course, the situation and make any adjustment in an orderly fashion, but continue to execute our plan.
Now, when you say you have a plan and you're going to adjust, this forecast has come out now, looking ahead. This is after we've already had the tax cuts come through. What kind of fiscal stimulus is in the pipeline? Is there any? Because that's what this report's calling for.
Well, the IMF report, obviously is very focused on the implications from global geopolitical dynamics and trade tensions on the global economy and the flow-on effect, as they see it, on economies around the world, including the Australian economy. We factored those global economic headwinds in when we put the budget together. That is why we prioritise $300 billion worth of income tax relief, which has already been legislated through the Parliament. That is why we do have a $100 billion infrastructure investment pipeline. That is why we're pursuing such an ambitious free trade agenda to ensure that our exporting businesses have the best possible access to markets around the world. That is why we're focusing on bringing electricity prices down. So we will continue to implement our plan. But of course, I mean, the third quarter national accounts data for Australia will come out in early December. We will, of course, consider the information that flows from that, and that will help inform our final judgments in relation to the half-yearly budget update, as we've always said.
But why not move for more fiscal stimulus when this is the worst growth forecast in 10 years? Why not agree with them? This is a call that's also coming from the RBA governor and it's also coming from the opposition. Why not listen?
Well, I mean, we have provided significant additional stimulus to the economy, $300 billion worth of income tax relief. That is $300 billion of additional money into
that's over the next 10 years, though, isn't it?
And $20 billion over the last 2.5 months so far, and continuing to roll out. So I mean, that is a significant significant stimulus.
And we're still looking at this bleak forecast.
Well, when you say weak forecast, the second highest growth outlook in the world, the second highest growth outlook compared to the G7 economies.
But
highest compared.
It's still down 1.7%.
Yeah, sure.
To 1.7%, down 0.4%. Global growth down. Australia's growth by 2020 is still predicted to be down 0.5% to 2.3%.
And we have a plan to deal with all of this, and we're of course implementing that plan. And we think it's very, very important that we continue to stick to that plan. And I should just say, making sure that government lives within its means is actually a very important part of ensuring that our economy and our fiscal the policy said that we are as resilient as possible economically and fiscally. I mean, essentially, as I've said to you the other day, the government doesn't have any money of its own. Increased spending means increased taxes. Increased taxes would harm the economy. And I mean, Labor went to the last election proposing to increase taxes.
It wouldn't necessarily mean increased taxes, though. It could just mean a lower surplus. Still a surplus, but still just less than $7 billion.
Well, look, increased spending over time, if you increase the spending growth trajectory, you will expose yourself to higher tax burdens. And that is what, I mean, Labor went to the last election. Labor went to the last election proposing to increase spending and to increase the tax burden. We made the point to the Australian people that that would weaken the economy, it would lead to higher unemployment and lower wages over time. And the Australian people agreed with our judgment. And we are sticking to our plan, as we always do. Of course, we'll continue to assess all of the economic information in front of us, and we'll make judgments in the context of the half-yearly budget update in an orderly fashion to continue to adjust our plan moving forward. And of course, next year we'll have another budget.
We've had comments this morning from former Liberal Treasurer Peter Costello, one of the most revered treasurers in the Liberal Party's history, saying there's only so many interest rate cuts left in their pocket. We're at 0.75%. That it's time for fiscal stimulus. If you've got Peter Costello saying it, surely it's time to pull the trigger.
Well, I haven't seen him say that it's time for fiscal stimulus. I've heard him make comments about, the level of interest rates, and it's a mathematical fact that there is obviously not much more scope. But I mean, ultimately, these are decisions that the Reserve Bank makes independently, and that's a very important feature of our system. And the government will continue to make decisions on fiscal policy settings. But what I'm putting to you is, we knew that these global economic headwinds were coming. We were quite candid with the Australian people in the lead-up to the last election. We were very candid, in fact, in the lead-up to the last election with the Australian people about the global economic headwinds that we were facing, which is a key reason why we made the point that this was precisely the wrong time for Labor's high-taxing, high-spending agenda, because it would have weakened the economy at a time when we were already facing a whole series of challenges, whereas our agenda is, of course, entirely focused on strengthening the economy into the future. And incidentally, I mean, the Reserve Bank Governor has repeatedly said in recent weeks that he expects the economy to gradually strengthen on the back of lower interest rates, lower taxes, continued high investment in infrastructure. And of course, our housing market started to stabilise, certainly on the East Coast. So, I mean, the resources sector has picked up. So, I mean, we've got to actually also look at the upside. I mean, in the context of a pretty challenging...
The upside of 0.75% interest rates?
No, in terms of the economic position we're in. Again, I mean, in an international context, the UK, Germany, Singapore, they had negative growth. They were contracting.
So for depositors, though, that means paying the bank to hold on to your money. That's an extraordinary thing to be putting onto people.
So Australia continues to grow. Australia continues to grow.
No, but if you're talking about, like, you're a person with a savings account, you don't have a mortgage, there's a lot of them out there, and a lot of them are retirees that help put you guys into government. Don't you want them to be confident about their savings?
So the point here is, like, when I talk about negative growth, I'm talking about negative economic growth in Germany, the UK and Singapore. When it comes to interest rates, I mean, obviously at times of lower interest rates, I mean, part of the reason why that helps to strengthen economic growth into the future is that, investors and people with savings will look for opportunities to invest in, obviously business growing, economy growing, opportunities.
Or they'll put their money under their mattress.
In the end, every individual Australian makes their own judgment as to how they invest their money. But, clearly, as interest rates are lower, that enhances the incentive for people to invest their savings, in economic activities that offer them the opportunity of a higher return.
Do you think banks are going to be happy with that, though? That they rely on deposit holders. They rely on people having money there so they can make money to then lend it out. You're telling them go spend it somewhere.
Well, no, I'm not saying go spend it somewhere. I mean, but this is just normal economics. I mean, obviously, lower official cash rates, lower interest rates, in general, mean that it becomes more attractive to invest in commercial activities that help to grow the economy into the future. I mean, that's basic economics. Now, in terms of the banks, I don't think that we do have to worry about the profitability of the banks just yet. I think our banks are in a very strong position. They should have passed on the cuts in official cash rate in full. The advice that the comments from the Reserve Bank Governor in recent times have indicated that the bank's funding costs have been coming down, but we now have, of course, this ICCC review that will look under the bonnet, so to speak, and we'll look at all of the facts and we'll see what comes out of that.
Just finally, do you envision at all that we'll see quantitative easing in the next 6 months?
Well, you've asked me that the other day. I mean, monetary policy is entirely a matter for the Reserve Bank. It's not something for the Australian
Is there something
government.
you're planning for?
And the other point I would make is that the Reserve Bank Governor has been absolutely explicit. He can't foresee a scenario where there would be unconventional monetary policy settings required in Australia. So, I look at, the person that actually has responsibility for this, together with the Reserve Bank board, and the Reserve Bank governor has been very clear he can't foresee a scenario where Australia would require unconventional monetary policy settings.
Well, we'll have to wait and see. Mathias Cormann, thank you for your time.
Always good to talk to you.